Amazon released earnings last week, and after an initial dip, the stock jumped 7%. At the latest share price, the company now has a market cap of $1.32 trillion. This was a pretty good earnings update from Amazon with growth across the board. Online stores were up 7%, physical stores up 6%, third-party services up 20%, subscriptions up 14%, advertising up 26%, and AWS increased 12%. Amazon has now produced $554 billion in revenue over the last 12 months, $24 billion of operating income, and $20 billion of net income, and that means the stock is valued at 2.4 times revenue or 67 times earnings. That sounds expensive, but Amazon is still investing for the future. Earlier this year, the company moved from one single fulfillment network in the US to 8 separate regions. This allows faster shipping and in turn drives customer loyalty. CEO Andy Jassy said the move had gone much better than expected, and it's helping to drive growth in consumables and everyday items. So when you account for interest, taxes, depreciation and amortization, Amazon's earnings are up to $74 billion, which represents an enterprise value to EBITDA ratio of only 18. Of course, it isn't all good news. The company faces a lawsuit from the FTC, which could take years to play out, and AWS growth at 12% is disappointing when compared to the 31% growth of Microsoft Azure and 22% growth of Google Cloud. But management said that AWS is picking up, with the company closing more deal volume in September than for the whole of Q3. Meanwhile, this was Amazon's second best ever quarter in terms of operating margin. Valuing Amazon is tricky because it's got so many moving parts, but we can try and estimate what its different segments might be worth in the future. In this table, I've projected 5% top line growth for online stores and physical stores over the next 5 years, 15% growth for third-party services, subscriptions and advertising, and 10% growth for AWS. I've given online stores a 1 times multiple to revenue, physical stores 0.5, third-party services a 3 times multiple, subscriptions and advertising a 4 times multiple, and AWS a 6 times multiple. Add it all up and you get a sum of the parts valuation of $2.6 trillion in 5 years' time. Based on today's share price, that works out to an investment return of roughly 15% per year. This is a simplistic model, but it's also not too aggressive. Amazon consists of several high-power businesses that continue to show a lot of strength. The company's investments in fulfillment give it a significant advantage over the competition, and there's still plenty of growth ahead in the form of consumables, advertising, AI and all its other investments. As a result, I continue to give the stock a bullish rating, but these are my personal opinions, not financial advice, and I do hold shares in the company. For more videos like this, see my new website 3minutebreakdowns.com, and as always, thank you for watching.